found it was a very excellent introduction from Ian to what we're going to discuss today, and we're going to try to put a little bit different spin and a different angle at the same issue. To give that really 360, I always try to approach everything from 360 view, because that really gives the well-rounded understanding of the item and how it impacts the society, how it impacts the industry overall. So talking about fintech, as Ian mentioned, about 10 years ago, they probably didn't exist. I've been in banking for 15 years, and I used to manage the segment, so they did exist. They just used to be called different ways. They, you used to call them third-party payment processors, remitters and such. If you kind of think about financial technology, the debit and credit cards, they were introduced since 1950s. So we've had technology out there. It's just different channel and different platform to share with the customers. When we're talking about the internet banking, it was introduced in 1990s, so it's still 30 years from now. It seems to be a new phenomena, and today we're going to unravel what that really means. Contactless payments technology, I think this is what we kind of have in mind when we talk about fintechs, and we have an excellent panel to give a little bit different flavor and different view at the fintech. I will address, and I will be putting the parallels with the discussion just to what happened, again, to give a well-rounded view. But I'm going to start with Dylan. And Dylan, I would like you to share from your perspective. You ex-Goldman, right? Yes, okay, as well. So would be a nice discussion to have. What is, in your view, what drives fintech and why fintech?
Okay, so first of all, I do think this is a very topical conversation on the back of what Ian was saying, because I think the key point is every fintech needs a bank, and the drive, and that really is the key to why fintech today has become so key. First and foremost, as the word implies, it's about technology, but technology has been around for a long time. What's interesting is it's the mindset that's now changing. And if before technology was seen, first of all, as only accessible by the very big, today the barriers to entry of using technology to make a difference in financial services is much lower. The one area that is often neglected when thinking about why fintech is much more prevalent today is actually the regulatory oversight, or the way that the regulators are increasingly thinking about what happens in financial services. Here in particular is an interesting test case because the regulators here are relatively young. When you look at I'm thinking about GFSA and where I'm based in ADGM, the FSRA. These regulators have very consciously looked at how the financial services landscape is being disrupted, and are looking to tailor their guidances, their regulations accordingly, which gives companies like Ian's, companies like mine, an opportunity to do things that, frankly, we wouldn't have been able to do a few years ago.
Interesting point, and I completely agree with you, but let's just take a step back. I want to go back to 2008, and I think that's really when the new traditional fintechs, and as we understand your company and other ones, start actually coming up and taking off. What happened in 2008? The traditional banking segment has been the only option outside of the supporting functions like, again, third-party payment processors and remitters. And during 2007, 2008, a lot of people lost money, lost jobs, got fed up with the banking system, to be completely frank. And there was three different factors, as you've mentioned, technology as well as the mindset, that were changing up. So the technology became available. The mobile was getting completely widespread. A lot of people in banked and unbanked areas start utilizing mobile devices for daily use across the financial products as well. Clients were a lot more educated in what technology can bring them, and then they demanded more. So they weren't really happy any longer with the traditional services that they were offered. And then, as you said, from the regulatory perspective, the regulations were, or onus on the regulations were put on the traditional side. So what that really developed is a vacuum and opportunity for the smaller end of town, especially with the need of job creations. The UK, the European Union, they gave a sandbox environment where they said, look, we're going to give you a break. Go ahead and do something, create a healthy competition and try to utilize technology, as you, Daniel, rightly said so, and then create something to cater to the client, cater to their needs, but at the same time, you will create the jobs, right? And you will reach an additional layer of customers that potentially couldn't use the services before.
Sure. I think the regulatory point that you're making is the banks are getting increasingly regulated, and that's true. And that's the negative side. The positive side are the regulators are changing their way of thinking, and that's the positive aspect. And it's these two forces that are frankly enabling a lot of what is happening today.
Correct. And then, so just putting a parallel, and I know, Ian, I'm not trying to pick on you, but I'm going to be calling on some messages that you've been providing in your presentation. It is very accurate that in order for fintechs to be a layer on top, you are dependent on the banking services. The challenge with banks providing you those bank accounts, and I know firsthand because I had the segment of technology providers, is that the bank will be processing anything that goes through your book and through your account. And a lot of times when it hits banks' accounts, you, in order to provide that cheaper service, you will be aggregating those transactions. So the bank becomes an arm's length from those transactions, and they have no visibility, which impacts then their downstream, systems, transaction monitoring, screening. And so with a very good humanitarian approach to give the banking services to those blue-collar individuals, you are introducing the risk that is sometimes too hard and too costly for banking institutions to carry.
So can I comment on that? And I agree with everything you say, Irina, but there's a but. And that but that only applies to incumbent old-school banks. And this goes back to the technology changing, and importantly, the mindset is changing. If you start thinking, so how is AML done? How is transaction monitoring done? You ask for information, you get the supporting documents. That's normally done by email, phone, WhatsApp these days, and then you have to cast your eye over it, and an experienced transaction monitoring officer then says yay or nay. And by the way, he or she is likely to have criminal responsibility. So not a great flight pattern for getting things off the ground or getting these transactions through. If you adopt a different mindset, which is I can use data to, in a much more accurate, in a much more real-time way, to scan and take decisions on these transactions, then you start thinking about your risks in a very different way. The challenge is you then have to get this mindset to be adopted not only by the fintech, which is maybe relatively easy, but your own compliance officer, and importantly, unless you're a member of the New York Fed and the dollar clearing system, your correspondent banks. And that's where the danger really lies. So AGTB is a Category 1 bank. We are fully digital, and we are actually servicing companies like Ian's, although not yet Ian's, that are clearing money here in the region. And so every day I face, I'm in the trenches of exactly these challenges. But when we talk to particularly the fintechs, when we say to them, look, normally a bank would come in, assess your KYC and EDD processes, and then on a 6-month or annual basis, verify that you are doing your controls, etc. That's a very backward-looking way of doing it. However, today, and how do you bridge the divide between fintech and banks? If the banks can become more like fintechs in their mindset, which is what we have tried to do, we can start working with fintechs in a way that they're able to work in order to mitigate risks. when we become in real time monitoring the monitors of the data that goes through their AML systems, that goes through their payment systems, so that we can become a real-time stop to any payments that we're not happy with, all of a sudden our risks are mitigated in a totally different way.
And this is excellent point. And I think your bank is what we've been trying to do is you go by education. So you de-risking by education. You're not de-risking the clients. And I think this is exactly what, I'm happy you said that. The approach we always try to do, there's always about minimizing and decreasing your risk. But it doesn't necessarily mean that you de-risk the client. And unfortunately, as you correctly said, so, the traditional lesser competent banks, or too big banks, they don't have enough visibility and or resourcing that they prioritize for those type of processes. So now, Nika, I'm gonna ask you to comment. So, in the light of light pays and a child molestation through the Westpac and what it comes out to, I know that some institutions kind of mentioned the black box, right? All the FinTech flows that going through the bank, they are not seeing them. Between what Daniel said and from your experience, how can we minimize the risk, and how do you think banks are addressing that type of risk going through the book?
Yeah, well, I suppose I come from a different sort of perspective. After 38 years of policing, I've probably seen the best. I've probably seen the best and the worst of everybody. I've seen from the naive to the total devious. And the whole thing that we're talking about here and why these things are evolving, it's a pendulum process, and it's all about behaviour. Everything is a behavioural situation. People generally will find a way of doing something, irrespective of where other people might assess it can't be done. I think Ian made that point a little bit earlier about smartphones in South Africa. Whilst there may not be any electricity per se, someone, if they want to, will find a way of doing something. What we've seen with a lot of the major banks is that they started getting driven by shareholder roles and shareholder issues. They started changing their culture from a sort of social license, which, in the day when I first got a bank account, the guy that was the manager of the bank knew my parents, they knew all the family, half of them were the godfather for half the people in the town that we're in. All right, but it's gone to a point now where most of the bigger banks started becoming sales oriented. Right, the whole driver of the game was let's get a sale here, let's make more money for the shareholders, and the commission process came into play. What I would have loved in the police force while I was going through it would have been a commission-based event. That for every dollar that I got into the government, someone was going to give me $1. Because I wouldn't be sitting here, I'd be sitting in somewhere in the Bahamas. But we've got to look at that process, and I think that's where the sort of issue in relation to how the fintechs have come in, because they've started recognising that there needs to be a return to the culture of social justice, especially for those that are not banked, those that are finding it difficult to get this process, and it has to be done in such a way that's a good experience for all parties. Now, we've been talking about inclusion and the stuff that Ian was talking about today. I think it's a very positive statement, because if people know that they can move their money confidently through whatever process they've got, then they're less likely to be exploited by organised crime. They're less likely to be influenced by those people that have power, because they do not. And in relation to LightPay was a classic example of a bank saying, well, we're going to exit all of the remitters that are working for us because they're doing it cheaply and they do a really good job, and we know what they're doing, so we're going to put a system in place that replaces it. Their fundamental mistake there was they thought they knew what they were doing. And as a consequence of that, they got themselves into all sorts of jams. The escalation of compliance in this space is a consequence of the governments believing the banks aren't doing enough in relation to the laws that have been put in place. It's a failure of the process. And, I make the comment with the FATF framework. For the last 30 years, the banks first started the whole framework, and I was around when that all occurred. And the bank said, we understand risk. We're the money men, we understand risk, so we will build our risk program. We will put the controls in place, and we will do a very good job in making sure that the criminals do not infiltrate, or if they do, we'll be able to advise the police of it. Unfortunately, for the last 30 years, they're still trying to beat the compliance of that statement. So yes, they're building a program, yes, they're putting controls in place, but fundamentally they're failing on understanding those controls and failing on the whole framework process. So the government comes in and says, well, you're failing, we're going to put more governance in place. And I think we've got to get the pendulum back a little bit. The bigger banks have got to understand that there is a role for fintechs, a big role for fintechs. The fintechs have got to understand that they've got to understand where the banks are coming from what you were talking, Irina, about the fact that they can't do it for nothing, and compliance costs are getting more and more and more because we still haven't got past the compliance tick-the-box game. If we can start understanding what the problems are, what the risks are in the environment, then we won't have a big bank trying to take over where the fintechs are. We won't have fintechs trying to take over where the big banks are, and we'll all work in a little bit more harmony, have the community come along, and the empowerment will be built. And so that's where I see the game going. Will it happen in the next 2 or 3 years? No. But I think it'll gradually start. The pendulum will come back to more of a social game, more inclusion from the people, more information to inform them on what they need to know. So increase their understanding, decrease their being naive about stuff. The bigger thing, of course, is that the criminals are learning just as fast as everybody else. And so their skills in relation to how they're doing their business are getting harder and harder, more and more complex. And so the scamming process and everything's getting greater and greater.
Yeah, thank you, Nick. And I think just to summarize all the triangle here, banks need fintechs, fintechs need banks, and people need fintechs because fintechs are agile. Fintechs create product that is tailored to the client needs quite quickly. Banks have risk mindsets and operational excellence, not all. Some digital do, some traditional do, and then they definitely picking up and improving in that space. And we're seeing in Australia right now and then around the globe that this is happening. But you probably put it right on the point. The training, and not only training, as Daniel said, of banking, holding fintech's hands just so they can actually bank them in a safe manner, but then also educating the end client and educating the whole ecosystem. So, Harsh, just to go back to you, fintech or banking, what is your opinion coming back from your background, and where does that balance sit? Do you see it to be a disruption? Do you see it to be going back into banking? And or is it a mix and collaboration?
First, let's understand in this way how the fintech has emerged. In any kind of business, any kind of industry, there has to be a problem or challenges exist. That problem or challenges leads to innovation to solve that problem or challenges. That innovation brings disruptive technologies to mitigate that problem and challenges. That disruptive technology eventually leads to either collaboration or acquisition or a merger. Because at the end of the day, if two players are competing in a market, they either tend to compete and one will be down and one will be surviving, or either of them will say, let's merge and let's collaborate and cater the needs of the society in a better way. So let's get back to initially when the fintech has emerged in a drastic way. Way back to 2 decades ago, when the fintechs has aggressively started their paving the ways in the financial industries, service per se. Initially they neglected, they dismissed, they criticized, and now since last 1 decade, they started recognizing, acquiring, or collaborating. I'll take one example how the bankings are now changing the way that it used to function by changing their operational structure and recognizing the fintechs in a way that prior it was not used to be. In India, the Axis Bank, called one of the largest private sector bank in India, few years ago FreeCharge, the mobile payment app, was acquired by a banking system. So one of the first of its kind where totally the proper traditional bank which is going to acquire any fintech. It was not an NBFC, non-typical micro bank. It was not a small bank, but it was pure fintech. So the acquisition of banking, traditional banking of a fintech that says that bankings are willing to now collaborate or acquire with such fintech modernized technology so that they can cater to the needs of their clients. How they help to the Axis Bank in terms of their operational wise? FreeCharge was a one mobile payment app because of which they gathered in 2 or 3 years of span of their initial span. Fintech has acquired at least 6 to 7% of the Indian market, and which has resulted into the large database which enabled the Axis Bank to analyze the data and to expand their service base to a geographic location. Now collaboration or acquisition, that also should come into mind, which is a better way to do it. Now data for financial industries, any industry in today's world, the data is the most important asset in the balance sheet. Though I come from chartered accountants background, tangible we always value it, but valuing intangible is also now important in today's industry era. So not any kind of, whether it's a bank or it's a fintech, they will be reluctant to share the data with the collaborative company. So what approach they should adopt, collaboration or acquisition? So when we are collaborating with any third party, obviously they are not tend to give the data to you for your data analytics and do how you are going to perform. It's just a collaboration of the platform to expand their base of operations, not in per se of your business integrations. So definitely acquisition is we have seen the recent threats in the initial year because data has an inherent value. So a lot of banks, followed by Axis Bank and other banks, have also taken initiative to acquire other fintechs in the other regions as well. Slowly, steadily, when the data the graphs has changed, collaborative approach will start, because now there will not be any premium over data because everybody will have that fintech in their inner system in the banking as such. So definitely the technology comes as a disruptive, but at the end of the day, it gonna collaborative or acquisition, and that's how the banking systems are going to evolve over a period of time.
Can I make you make a very good point there, very good point. And I can understand that when I was working for government, I thought that government was fairly siloed. But since working in the private sector and working with banks, they scare government on how siloed banks can be. And the collaboration process is actually a vulnerability that the criminals are actually exploiting very well. And, if we can get better collaboration, because, we talk about competition and, people put a lot of heart and soul and intellectual property into things. They don't want to be giving it away for nothing. But there has to be a way for the financial institutions to be able to provide some information. And then when that trust level increases, government helping them do that. And that relationship and that coordination and that collaboration will make the environment 10 times harder for the criminal element. And it will also improve the people's experience.
So I just want to add on what's been said by my two co-panelists. I think collaboration or competition is too linear and too two-dimensional. I think you need to also consider that these two institutions, or these two types of institutions, are actually forcing or resulting in a change of what the financial industry does. Where banks evolve, what the banks will continue to do versus what non-bank financial institutions, and importantly, non-financial institutions, big tech being an obvious one, but a lot more than just the Apples or the Tencents of this world. So I think what's interesting for me is the force of financial and other, technological and mindset innovation that is happening right now, faster than I've ever seen it, and maybe the youngest on this panel, but still faster than I've ever seen it, and how that's going to impact the financial industry, what it does, and importantly what it does no longer do, because it doesn't do it well going forward. So it's not about collaboration, and it's not about the takeover, because or buying. It's recognizing that banks are not going to be able to compete in many of the areas that they today expect is their bread and butter / monopoly. That's not going to be the case in 5 years' time.
That's actually a very interesting point you've raised, Daniel. But I want to go back to what Harsh and Nick was saying. So on one end, completely agree with you that data is an essence. The point is when you have it and what type of data do you have. And when we're talking about collaboration and then really working in PPP, right, the private-public partnership, what does this really mean? And I want to put it in the terms and kind of marry it with what just Daniel was saying. When we're introducing and looking at open banking, for example, and or the reality of an existing financial end-to-end supply chain ecosystem. The challenge, I think, and Ian left before I was able to pick on him again, the challenge is that when fintechs offer certain products, and the reason why I know, because I had to look through the book and I needed to understand how those transactions look like. When it hits the banking book, it looks like an aggregated one large sum of MasterCard or Visa or Amex or WeChat Pay, or as you said, TechFin, sometimes it's Tencent, sometimes it's Amazon and so forth. So majority of times you would be lucky in your institution if you see at least the separate transaction out. If you're dealing with a lot of different fintech intermediaries and or digital banks in between, in one jurisdiction you might have a transaction in an API format. Then it might go through SWIFT. Then it might go through Avid. So the data transmission is very, very different. So if you think about in traditional sense travel rule, it's non-existent because the data format will change so many times. By the time it gets to you, how can you even rely that that is the data that you need? Is that a really person who is on that end of the transaction? And or we're facing intermediaries. Somebody actually mentioned TransferWise and other institutions. TransferWise aggregates sometimes transactions, and it's a known issue that it looks like a treasury service on your own book. Is that the data that you want? And then just going back to, and then I'll pass it along to you, and going back to the marrying and collaboration and trust. That's the essence of it. And I think what we're trying to do, we're trying to work with SWIFT right now to develop a standard. So no matter where you're going through the local new payment platform in Australia, or you're going through SWIFT globally or domestically, we need to treat the same transaction completely equally, because right now, if something hit in my book or I'm at the client side and I'm doing audit, I don't know if I'm looking at the domestic transaction or international. Do I need to screen it? Is it exactly and consistently taken by the regulator in UAE or MENA or the Africa and or Australia? So the data and consistency of data is a gold, but can you actually have it?
Can I give you an example of precisely that? And it talks about legacy systems and agility. I think one of the reasons why fintechs have got such a presence at the moment is that they can be agile. Even getting to a point where you've got a financial institution that's working off a single platform is a hell of a lot better than what more of the older firms were. But a good example of data and how difficult it is. I was in a meeting in Egmont in Paris about 5-6 years ago when we were talking about how we're going to deal with ISIL. And 91 of the countries under the Egmont banner, the FIUs, said, look, we'll take a group of a set of data that we all have, and we'll bring it all together and we'll do an analysis of the environment and understand what the environment is, because if you understand environment, you understand risk, because risk is created because you don't understand environment. But in effect, that project, whilst it was good in terms and everyone agreed to it, took 9 months for all of the organisations to be able to find a data set and a database that could actually talk to each other. 9 months, and that's governments around the world that have got all the money and all the power and all the rules to be able to do that. So one of the other things I think that, aside from the fact that you've got more better inclusion from fintechs, is that fintechs are also assisting on this data quality stuff. And give us a few more years and I can suggest that we'll move, as I said yesterday, from unstructured paper-based to a digitisation, which then allows the computer systems to remember everything that goes on. I don't think they're very good at thinking, but they're very, very exceptionally good at remembering. And they're the sorts of things, if we can start doing that, we're going to start getting better synergies around what we're trying to achieve.
And this is, did you want to?
Just to add that, data, we should not consider data as just one asset of it. We have to segregate it in an entire process of data processing, and each independent process has its own inherent value per se. So just continuing to my your example, what you take, transfer of rice. So in my particular one example, I have encountered there is a challenges of regulatory missing out by particular one company in international payment bank. When one country requires regulatory approvals for one foreign remittance, so how does this typical payment banks works in a foreign, and how it gonna help you in a data validation and the processing and a per se asset per se. So when a particular company is located in United Arab Emirates, they're providing services to UK, but they want to take money in UK bank account. Now setting up a company for one particular client in UK is practically is impossible. Opening up, having a bank account of your UAE company in UK for one particular company is again practical challenges and difficulties. What should be done? These are problems, challenges, and the payment fintechs have solved the problem, but not yet 360-degree foolproof. Why? Because regulatory challenges, hurdles are there. So here, when the banks and the fintechs are collaborate, this data validation, the whatever data this TransferWise or other companies fintech has, this really helps in per se banks to take decision where the potential my customers, my clients who are going to come from fintech, they are going to locate it, where they are going, providing the services, how my potential market which I may tap. So same was happened with Axis Bank also. In India, the BPL and the youngest populations are now having Android and iOS based app, but they are not accessible to the banking yet prior to 4-5 years ago. So mobile bank and the Paytm, they are enabled to bring them into the mainstream of banking system one or other way. So this has helps the banks to take decisions whether I should have my banking system accessible to such customers, or the profiling based on the data what the payment fintech has. So yes, data has its advantage, pros and cons again, but each processing has its own merits. Based on that, we can take a decisions to it.
Yes, and this is excellent point. So this one large big four banks in Australia, just spoke to them before coming here, and one of the biggest challenges that they've had, everybody wants to be in open banking, everybody wants to be an NPP. NPP is a new payment platform in Australia, and so they've segregated largest third parties from the fintechs, neobanks, and the traditional banks. And so they're trying to marry the process. But what they realized, that is so costly to even standardize the data. I'm not even talking about metadata within your company, but how it passes along, because the regulator, before they say green lights, they need to ensure this works. And then so that a lot of these larger companies who are competing to be part of that group start dropping out. And what we're seeing, they said, no, you guys go do, and then when you finally approved, we'll jump on the wagon. It's just because in the essence of it, it's easy to say how we're gonna do or what we're gonna do with data, but standardization of data and having that global specific consistent standard, that's the only way to approach it. And then when we're going through, the ACH and wires, I mean, again, Feds in the US and NPP in Australia, and then when you plug it in through a lot of different fintechs with the API, do you pass the message, the same standard that the traditional bank would? do you marry that? And this is the challenge what we're seeing across the different players. Everyone think that they can use the architectural structure because I can plug in a bank because I can sit above the bank and I use my core system here. And then how it affects you downstream, especially if you're acquiring clients right here and then your transactions are booked right here. Does your message and does your data flow correctly? And we are in a data age, as you rightly said so. So, Daniel, you were keen to say something about it.
No, look, I think discussions on data, particularly in light of Facebook, etc., are now gathering in the epic proportions, and I still get the sense that most of these discussions don't really get to the detail, because that's where the real challenges lie. And you're right, the moment you start getting into figuring out the standards, mapping the fields across different platforms, it becomes a total nightmare. Are we going to get to a standardization of data across the world? No. Are the governments ever going to be able to do that holistically? No. Is SWIFT, GPI the best hope for now? Possibly. Can we look to closed loop network/ecosystems? Incidentally, we're building one at the moment to serve smaller purposes for the participants in those ecosystems, possibly. But I don't want to try and boil the ocean. We try to solve one challenge at a time, keeping an eye on the bigger picture, but saying, you know what, if we have to define a set of standards that we're going to use with our ecosystem, the suppliers, the buyers, the warehouse service providers, etc., let's do that. Let's create a digital island that will be as close to what we know is out there, and then we'll expect we're going to be able to standardize across that.
Yeah, and
Can I feel the pains of the banks. You know, I talk to some of the guys, especially in their sort of fraud space, and they're saying that, you know, they'll have to look anywhere between 50 and 70 systems within their institution just to work out whether they have any data on a particular individual. And sometimes they could have up to 11 or 12 profiles of the same person across different games. Now, if you've got more than one profile of an individual, you don't know the individual. You don't know your customer. And as a consequence of that, we're trying to do these things in a very hard way. But my issue is, I don't really care what your data has and what you haven't got, because if you've got a field that needs to be filled in, it will get filled in by somebody. My problem is, how the hell are you going to validate it? Because I can put anything I like, Mr. Smith or whatever. What you've got to try and do as part of an evidence-based game for us to do what this whole platform's about is to actually validate what's written there, so you can make informed decisions. And that's another story all over again. That's probably another conference.
Yeah, but the 12 different profiles and 17 different systems, that is the classic IT systems legacy in traditional banks, I think. So yes, they need to get around that, and we all know the JP Coin, this wonderful GLT tool that's actually just used to be able to sit on top of all their core systems, so because they don't talk to each other. But actually, even when you get to, so we have a single tech stack where data flows all across it. So we only have one profile. Our CRM speaks to our payment system, to our sanction engine. Wonderful. But at the end of the day, I still, when I try to communicate with our clients, with their suppliers, again, with port authorities, they're all going to be using different data standards. So even there, you're always going to have differences in how data are, depending on where you come from, used. And you're never going to get around that. So, but the mindset with which you do that has to be different. And unfortunately, data for banks was an afterthought when these systems were built.
And this is actually an excellent point, but let's just take a step back. What is the whole point of having a program, AML program? Is that, we want to understand the data? Is that the regulator really cares if we have the data and it passes? What is the
AML
point?
program? To avoid fines.
Yes, but, we want to understand parties to transaction just ultimately to prevent the rogue guy to bring information. So, from the standpoint of, just closing back on what you just said, we're probably not gonna get it right away. But I wanted to spin it, but it looks like we're out of time. I wanted to spin it back to the regulation. When the fintechs were uprising, they were given a nice sandbox of 2.5 years with no regulation. So now as everybody's coming up, regulation is getting standardized. So because the larger institutions are required to have those programs and ensuring that the data flows correctly and goes through their monitoring systems and sanction screening system and so forth, again, not to check the box, just to prevent the crime. Fintechs and neobanks and digital banks will be upbringing the requirements. And so the obligation, where the onus sits, and I want to leave everybody in this room with that idea or a thought, who owns the risk? And how does supply chain look like from end to end? Who are your parties to the transaction? What do you really need to understand? Can we say we can't solve the data problem, so we're gonna do it one step at a time? Correct, but if you have 5 different entities in the transaction and you have a seamless settlement of millions of dollars at the same second, your data gotta be right.
So, very, very valid point. And again, so we're not a fintech, we're a bank. And so from day one, being category 1, we had to build all the controls and processes around this. So I had to do this, I had to build this from scratch. So lots of pain and lots of learning over the 2 years. What you're talking about as to who owns the risk, it's everybody at different points, and the penalties for getting wrong are different for different parties and different people within an organization. As the head of the organization, I own all of the risk of a GTB. But how is that the relation to data, and how do we use data in order to do things faster, cheaper, more effectively? We have to build tools. And ultimately, if you're having 5 different data sources where the data cannot be cleansed, cannot be brought together, human intelligence comes in. Now, will one day human intelligence be replaced, augmented by AI? I hate using buzzwords. I don't believe AI is going to come in and save the day. But things are changing, and there are increasing tools again and again every day that are helping to make decisions faster.
Yeah. And so I completely agree with you. So I guess the point of the discussion is there are challenges. There's the fintechs, and we are growing, and then growing quickly. And the banks are here to stay. I personally believe it's always going to be some kind of level of collaboration, because the fintechs, as Ian said, and you guys said, they rely on banks. They sit above the banks. As long as we can provide standardized messaging, as long as we can work correctly in collaboration and ensuring that every single party to the transaction own their piece of the transaction and risk, that's the only way we can ensure the health and sustainability of innovation in the ecosystem. So, yeah. With that said, otherwise they're gonna get me off the stage right now. With that said, can we open the floor to the questions?
So my question is open to any one of you. In most cases, whenever there is an attempt to integrate fintech with the traditional systems, and as you have already mentioned, the legacy system have got, they don't talk to each other in most cases. And in most cases, you'll also see the stakeholders who are managing those legacy systems have been working on those systems for very recent times. And the complications are much more than what it looks from outside. And the systems, the project normally, many cases it fail because of time and cost overrun. So what is the best way in your experiences which the sponsors would undertake to ensure that the project doesn't fail because of this cost and time overrun? And they also require some management of the culture of the organization, the insecurities which the stakeholders face, how all these problems you feel needs to be solved, in order to bridge the gap between the traditional system and the fintech?
Look, I'll be slightly facetious and say hire the right people. It's quite simple. For instance, I've stopped hiring bankers as a start. The banking is a really odd industry that has been so oligopolistic that it has become spoiled. So we've tried to bring disruption from the outside, but start from within. So if you get the right people that are able to have a different mindset to be able to reimagine how things can be done, albeit we were fortunate enough to be able to do it from scratch, you will get a better result.
Can I make the point? Understand that the whole platform, everything we're talking about here is based on risk, right? You have a risk appetite for doing things that you need to do. My view of the world is that you're going to have to start getting a lot more aggressive around your risk. Make some decisions about certain things and stick with them. You know, we're starting to see more and more banks are doing that. I don't want to play with this man anymore or this woman anymore, they're gone. Not, I will just muck around a little bit on the edges and see whether we can get away with it. So, you know, it's a risk game, start applying your risk.
And just from the technical perspective, and I know I'm closing up, look, start with a lineage exercise, and it has to be very robust. Take all your booking sources, understand what data is supposed to come out from the booking sources, understand what are your ETL or any mechanisms that create your metadata. It has to come out, whatever comes out here has to be here, and then your rule engine have to commensurate with all of your products that you offer. It's a very technical exercise. We've done it many times. If you would like, I'm more than happy to walk you through step by step outside of this, because we're going to be kicked off from the stage just in 1 minute. So make sure your data within your institution works. And then look at the service providers and or partners, whoever passes data to you, and make sure that actually flows correctly. So as long as we can ensure that proper lineage between not only architectural setup within your organization, but also within the ecosystem, that will allow you to manage your risk on your downstream processes correctly as well. So with that said, I have to close up. Oh, one more question? Okay, one more question, sorry.
Sorry, I have the mic. So I think just stepping away from data for a minute and talking about the whole bank fintech situation, and just maybe observation is, I liked what Daniel said earlier around, you know, competition and evolution, because for banks, the big thing is, who am I competing with? And who's going to take my lunch, on the one hand. But on the other hand, what we find in South Africa is that the number one risk on risk registers for banks today is security. So whether it be cybersecurity or otherwise, it's something that they're very concerned about. So if you look at those two things in conjunction with each other, what banks are trying to do is they're trying to evolve in order to compete against maybe standalone online banks or fintechs. And in order to do that, they need to amend their processes, and they need to do things differently, whether it is from an origination perspective or all the way through the process. So the other way of looking at it is for banks to find partners that will support them in solving these problems. Traditionally, banks in South Africa have very much solved all problems themselves, and have really thought that, you know, when it comes to tech, it's their tech and nobody else's tech. But that has changed quite significantly in the last couple of years. And so my point is really just to say that we shouldn't just look at fintech and banking as being separate or just an online bank, but companies like, for example, the company that I work for create solutions for banks in, for example, the RegTech space, KYC, all those kinds of things. And it's really for banks, the challenge will be how to identify digital partners that will support them on their journey of evolving, but at the same time also being the type of partners that will not create a challenge for them in terms of risk management when it comes to security.
Can I totally agree with you there? I think the problem we've had up to date too is that too many institutions are internalising their problem. They're not bringing in the right people. As Daniel said, you're not getting the right advice in relation to that stuff. And I can guarantee you that the regulators are starting to get more and more information than they've ever had before. If you internalise your problem, as Westpac did in Australia, then you're going to get stung. It might not be today, it might not be tomorrow, but you will get stung.
10-year cycle normally. No, but this is excellent point. But again, in a competition side, just, not only security perspective, like one more point I just wanted to add, it's also economic state, right? When you downturn and then you are having not only liquidity issues, and or security issues, when there is a run on bank, and in our lifetime right now, we have security or cyber would be one of them. When one bank has an outage for 2 weeks and then clients cannot actually, either get in the system or understand their balances or so forth. When you have a mortar bank, having a branch, at least you get out of the house and travel and get your, the money and so forth. When you working with totally digital bank, and then you're talking a chat, when there's an outage in electricity and or completely overhaul from the security perspective, if you rightly said, raised so, what are you gonna do? Are you gonna be stranded if you're traveling? Are you gonna be out of food because you can't buy groceries? So those are the items we need to think as a society. Do we have a counter measures if we're going fully digital and we're going fully innovation? And that's why, in the essence of it, my personal opinion, it will always be a mix of the two. As Harsh mentioned, it's it's a collaboration, right? It's gonna be a certain harmony of the ecosystem that will be on the back end preventing the digital, fully digital risks as well. So with that said, thank you so much, our panel. It was great discussion. I hope it was interesting. We wanted to make it 360 and thought-provocative. We are here available. If just feel free to stop and